you're seeing a lot of countries getting very excited about the fact that China is one of the only major countries that actually is going to grow this year. Most of the countries, because of the pandemic, will in fact face some challenges when it comes to economic growth. Now, part of that is because China was lucky enough to be one of the first countries that entered this terrible pandemic and one of the first to leave that. But having said that, the growth is quite impressive, and that certainly is making China a very attractive place to invest.
And where's the bulk of the investment going? Which industries?
Well, you're seeing investment going into technology. That is an exciting place that companies are getting excited with. And of course, some countries are getting excited about the fact that China is now opening up and allowing financial institutions to basically go in and have greater ownership shares than before. So that is making China a pretty exciting kind of an environment in a world where we see some trade tensions. But on the foreign direct investment side, you see that we're not seeing as much of that tension because foreign direct investment is much higher than it was last year.
Now, we do know that it is a different situation when it comes to the United States. China and the U.S. obviously still embroiled in their trade war on top of the pandemic. And then you also have the U.S. putting pressure on some of these tiny Chinese tech firms, for example, with the TikTok deal, and also pressure when it comes to Huawei and its 5G technology. How is that impacting U.S. FDI into China?
Well, I think it's having a little bit of a dampening effect, there's no doubt. But I don't think we should confuse what's happening in the short run with what's likely to happen over a longer period of time. I think that once these issues are resolved, and they will be, I think that foreign direct investment between the two countries will in fact increase. That doesn't mean that there won't be some stumbling blocks, and that doesn't mean that there's not going to be some changes and reforms. But I think if you look out over the next 3 to 5 years, it's impossible to think that the two largest economies in the world are not going to cooperate in some form.
Now, you mentioned some of these reforms. We know that there's been calls from Germany and India for China to really sort of adapt or reform its investment process and landscape. What are your thoughts on what might be needed?
Well, I think what might be needed is some of the things that I already see, and that is China is, the Ministry of Commerce is going out of its way to be a lot more friendly to foreign direct investors. So more openness and more transparency, a little bit more openness when it comes to foreign exchange. And in fact, we're starting to see that already. China is relaxing some of the restrictions in financial institutions that want to conduct transactions in currency forwards, lowering that ratio of how much money has to be held on reserve if you make a transaction into the future. So all those steps and greater openness with regard to capital flows is exactly what's needed. I think that the financial exchanges have already started the ball rolling by allowing Chinese equity markets or Chinese investments to be part of the indices. All that is part of a long-running trend that I think is going to lead to much better flows between countries and China.